Hello everyone, and welcome to our 10-minute video series. My name is Mary Jane Rodriguez, and I'm doing this for Ultimate Access. Our video today covers the CIMA Management Case Study exam happening in August 2018, and it is on the pre-seen company called Montell. Montell is a multinational camera manufacturer and distributor, and they are based in Farland. Our topic for today is the E2 Syllabus Topic C, Part 1, which talks about the effectiveness of organizational relationships. There are a couple of things under this topic. They talk about building, leading, and managing teams. They talk about the effectiveness of handling relationships between the finance function as well as the supply chain and the other parts of the organization. And most specifically, the one that we're going to focus on today is trying to discuss the effectiveness of handling relationship between the finance function and the external experts and stakeholders. These external experts would include people in accounting, in tax or legal, as well as auditors and financial stakeholders such as shareholders and investors. We would need to be able to handle relationship and manage these relationships to try and meet the objectives of the company as well as governance responsibilities that the company has. A little bit of corporate governance background. There are 5 aspects to corporate governance. It talks about leadership, effectiveness, accountability, remuneration, and shareholder relationship. So I'll just briefly go for an overview of these 5 aspects. For leadership, it covers the role that the board of directors has on the company, how the responsibilities are divided up between the directors, talks about the chairman of the board, talks about non-executives being present on the board or not. Effectiveness looks at the composition of the board, how well-skilled, experienced and independent are the directors that are on the board. It also looks at the commitment that they have to the company, to spend time doing or performing work for the company. How are directors appointed to the board? That's also a process that is covered by effectiveness. Accountability looks at reporting. Now, this covers risk management and internal controls for the company, trying to see if there are controls that are being circumvented or failing and that we should correct them. Audit committees, such as auditors, are generally involved in accountability, in the accountability responsibility of the company. Remuneration covers packages and salaries of the directors. We look at the procedure on how they set the salaries for the directors, and there are a couple of, it looks at what components are included in the package to ensure that we retain or attract the right talents to our board of directors. At the same time, the salary should not be excessive or extravagant. As well as the same time, the salary and packages should not be over the board where it's too excessive that it does not make sense. Shareholder relationship deals with the relationship of the board to the stakeholders of the business, mainly the shareholders. Talks about the correspondence that they have or contact that the board of directors has with the shareholders. Annual general meetings normally fall under this relationship to ensure that the investors gain an understanding of the business that they have invested in. After all, it is their money and they need to know whether they are going to make a return on this investment or not. So why did we choose this topic for today? Let's look at the pre-scene. The pre-scene spoke about Montell being a listed company. And now Montell being a listed company would mean that Montell is required to comply with corporate governance rules. In the UK Corporate Governance Code governs the rules and regulations surrounding corporate governance. In this code, listed companies are required to comply with the rules, and if they're not complying, they have to explain where they have not complied and why they have not complied. If we applied the UK Corporate Governance Code to Montell, it would mean that Montell needs to fulfill this requirement. There are further suggestions on the pre-seen material to show that Montell takes corporate governance seriously. If we look at the management structure of Montell, it shows us the management structure. There are 5 executive directors on the board, as well as there are 4 non-executive directors, which is kind of a good mix. It is further suggested on the pre-seen that Montell takes corporate governance very seriously. If we look at the management structure of Montell, there are 5 executive directors on the board, and there are 4 non-executive directors on the board, which is a good even mix or uneven mix, but it's still good. The experiences and skill levels of the different directors are contained in the pre-seen material to show us how well suited they are for Montell or not. And as such, it actually gives the impression that corporate governance will be a big topic at the exams. As with all our 10-minute video series, we have come to the question and answer portion. We have a little question here, and this is the question. The senior financial manager has emailed you the following. As you know, we have decided to ramp up our online presence and IT technology within the organization. This decision led to the search of an IT director for Montell. The remuneration committee of the company is now considering the remuneration of the newly appointed IT director. The committee has received a letter from the IT director in which he details his strong track record and asks that the main component of his remuneration package to be a substantial salary above the current market rate. One of the non-executive directors, David Fortune, serves under the remuneration committee and is also a good friend of the IT director. David has been trying to persuade the other members of the remuneration committee to acknowledge his advice and support in the matter. He is trying to encourage the committee to accept the above remuneration package with little or no resistance. Finance Director Endo Karsa wants us to write up a report on the possible corporate governance issues the above request creates. As I'm currently busy, would you mind putting together the notes, and we'll discuss and finalize the report afterwards. As with all our questions, I encourage students to incorporate steps to write an answer plan. Herein, you will pick out the text, build your response around the requirements, write down 5 to 6 points for each requirement that you want to raise, and list down any keywords or theories that you may want to use. So here's a sample of my answer plan. I would probably introduce corporate governance, and I'd talk about 5 issues altogether. I'd say the first issue would be the director's involvement in setting his own salary. Issue 2 would be that the salary is a little bit excessive. Issue 3, the request is not aligned with shareholder interest. Issue 4, the independence of the committee seems a little bit compromised. And issue 5, there's coercion within the committee. Conclusion, what should happen is what I will be talking about. And so here's my answer. Corporate governance can be described as the system by which companies are directed and controlled in the interests of shareholders and other stakeholders. Governance is an issue for all organizations, especially listed companies like Montell, which are expected to comply and follow the general rules of best practices. In the UK Corporate Governance Code governs the rules surrounding corporate governance. Publicly listed companies are required to disclose how they have complied with the code and explain where they have not applied the code. If the Remuneration Committee agrees to the IT Director's remuneration package, it will raise the following corporate governance issues. Firstly, no director should be involved in setting his own salary package. If the decision to approve the IT Director's package is based on the letter he wrote to justify why he is asking to set his own salary, then this is not best practice. The committee should not have acted upon the letter, but rather should arrive at the decision methodically and logically. Second, the basic salary of a director should not be excessive. Governance suggests that a director's salary should be sufficient enough so that we can attract, maintain, motivate the right talent. Awarding the new IT director with a higher than market rate salary seems more than necessary. Third, the requested package is not aligned with the interests of shareholders. Packages are paid out regardless of whether Montell performs or not. There should be a reward component in the IT director's salary that links back to the company and individual performance. Another issue is that the independence of the non-executive directors in the remuneration committee is compromised. David Fortune, one of the non-execs, is a good friend of the IT director, thereby creating a conflict of interest. David should recuse himself from voting whether to accept the requested remuneration package or the setting of his friend's salary. Not only is David Fortune's independence compromised, the rest of the members of the remuneration committee seem like they are being coerced into agreeing to the package. If true, then governance has failed. The director should be free from influence when making these kinds of decisions. In conclusion, I believe that the committee should disregard the letter presented by the IT director. David should also remove himself from the situation. The rest of the directors should set the salary and package as they see fit and reasonable, and in the best interest of the shareholders. And that's it for me for today. I hope you found this video helpful, and I hope your preparations are going well. Good luck for the exams, and I'll see you next time.